Thank you for staying with us here on the WHHI-TV Daily News. With me now is Benji Gecy, and I usually chat with him on real estate in the Lowcountry, but we have some things that are a little bit newsworthy to talk about today.
Exciting news. Last week, 0.5% cut from the feds, and rates actually went up a little bit, Betsy.
Yes,
so definitely news for the real estate markets out there.
Right. So but I think that's probably a little surprising for people. So kind of walk us through why that happened.
Well, we had 6 straight weeks of declining rates going up to the Tuesday before the best rates in 2 years. Actually, really attractive rates. We had a lot of people lock in, but we had a lot of people that were wanting to wait and see what happened with the Fed rate cut. My forecast was I thought rates would probably bump up a little bit because 6 straight weeks, they can't go down every week. That's exactly what happened. So we had a lot of disappointed buyers, a lot of disappointed people wanting to refinance, but they did call back and they were wondering why did the rates actually go up after such a big rate cut by the Fed. So most important thing is the rate cut that he did last week, that's for home equity loans, car loans, credit cards. It's not your long-term mortgage. So the bond markets, 10-year, 30-year, that's what dictates, and that kind of follows suit with our rates. So cutting rates, that's definitely going to improve those long-term markets. But I think the market was a little surprised by the 0.5%. And there was a lot of hedging, a lot of two-way trades going on. And that money's starting to settle down a week later. The yields are starting to come back down a little bit, but we hit 3.59 Tuesday, went all the way up to 3.8, which was a big move. So rates that were available Tuesday of last week, we weren't even close to those. So that confused a lot of buyers a little bit, but rates are coming back down. Rates are kind of hanging around right around 5.25, 5.3 on the VA. We got all the way down to 4.75 on Tuesday. So you can see there's about a 0.5% move, but I do think those rates are going to come back down to that 4.75, maybe even a little lower on the government rates right there. So conventional's hanging in there, 5.5%. That bumped up to 5.7. That's coming back down a little bit. So overall, we're getting closer to that 5.0 target that I had earlier this year.
Right. And so let's talk a little bit about refinancing, because when last time we were chatting on real estate, we did talk about that since they had gone down, it was maybe an okay time to do that. But now, as you're saying, they bumped up a little bit, but it was still better than we were many months ago.
So here's the big question. Everybody wants to know the advice. Should I refinance right now or should I wait? You're saying rates are going to go lower. Why should I not wait? Why should I wait? So that's a good question. My advice is you should take advantage of the market conditions right now. So I don't know that the rates are going down. I'm hoping that they will. Probability they will go a little lower. But here's what happens in a refinance boom. You take advantage of the market right now. Rates have made a big move downward. That's an advantage for you on the market. If you refinance right now, if rates go lower, what's going to happen is we're going to get into a refinance boom. Mortgage brokers, banks are going to fight for your business. It's going to cost a lot less to refinance again if we get lower rates. So take advantage of it now. And if rates go lower, refinance again. And I promise you on that second refi, it's either going to be a no cost or a limited closing cost on that one. And you get the advantages of both markets, market lower right now and a market lower down the road. And if rates go up, you've taken advantage of it right now. And that could happen. So everybody is forecasting rates lower. Earlier this year, Fannie Mae, Freddie Mac, Realtors Association, they had higher rates for longer. I was the only one forecasting lower rates. Now everyone's forecasting rates lower. So everyone can't be right. We're going to have peaks and valleys here. Rates don't go down in a straight line, just like last week. We had a nice dip. Rates bumped up, and that chart will eventually trend lower over the next 2 years, especially with the series of rate cuts that we have. But I would take advantage of the market right now. Lock in, get the best rate you can, and shop your rate. That's always good advice.
Shop your rate. That's always your advice, for sure. In our last 30 seconds or so, let's talk about buyers. I mean, because obviously you said you had some disappointed buyers that were calling about this last rate cut. What is your advice for them right now?
Well, buyers, you can imagine 6 straight weeks improving rates. That's a lot of buying power. So a $300,000 home, now they can go to $400,000. So when the rates bump up 0.5% overnight like that, it takes a lot of buying power away from the buyers. So my advice to the buyers are hang in there. I think the markets will settle down a little bit, but you have to lock in on the dips. We've talked about this for 6 months, maybe a year or so. When you get these trends that dip down, you've got to lock that rate in. And if rates go a little lower, dealing with a mortgage broker, that mortgage broker might be able to jump to another lender and get the lower rate. So if you're working with just one bank, you don't have that flexibility. So I think it is an advantage to shop your rate with a mortgage broker.
Well, Benji, thank you so much for the information.
Thanks for
As
having
always,
me,
that's
Betsy.
great. Yep. And there's much more to come, so stay tuned.